The 5 assets the ultra-wealthy buy that most people never consider, and how you can have them too. Most people own 3 things: stocks, a house, a savings account. The ultra-wealthy own a completely different set of assets. By the end of this video, you'll know all 5, and exactly how you can start buying them yourself. These aren't get-rich-quick plays. These are wealth preservation assets that compound quietly for decades, while their owners pay almost nothing in tax on them. You'll see the one billionaire families use as a private bank, the asset class that mails you a check every month for doing nothing, and the one Bill Gates quietly became the largest private owner of in America. Stay with me. The wildest one is at the end. First, the biggest gains in any company happen before the stock market ever sees it. When a startup is going to be worth $10 billion, the people who get rich aren't the public shareholders who buy it on day one. It's the people who got in at the Series A valuation of $200 million. They made 50 times their money before retail investors even heard the name. That's a private placement. It's an investment in a company that hasn't gone public yet. And until recently, it was completely off limits unless you were what the SEC calls an accredited investor, meaning $1 million net worth or 200 grand in income. Now, accredited investors have access to platforms like AngelList, EquityZen, Forge, places where you can buy actual shares in pre-IPO companies. Minimums have dropped to $10,000 or $20,000. Mark Cuban famously turned 300 grand into 1.6 billion when Yahoo bought Broadcast.com. None of that money was made on the public stock market. It was private equity that did the work. The ultra-wealthy have been doing this for 40 years. The door is just now starting to open for everyone else. Now the most misunderstood asset on this list. High cash value, whole life insurance. Hold on, before you click away. This isn't the garbage whole life policy your uncle tried to sell you. This is a specifically structured policy used by wealthy families for over a century. The Rockefellers used it, Walt Disney used it. Basically, every family office with more than $50 million uses some version of it. Here's how it works. You overfund a permanent life insurance policy. The cash value grows tax-free every year for the rest of your life. Then, and this is the trick, you borrow against your own cash value at 1 or 2% interest. You use the loan tax-free. You never have to pay it back. When you die, the death benefit pays off the loan, and your heirs get the rest. And here's the part that breaks people's brains. The policy keeps earning dividends on your full cash value, even after you borrow against it. You're paying the insurance company 2% interest, while that same dollar keeps growing inside the policy at 4 to 6%. Your money is in 2 places at once. You've turned an insurance policy into a tax-free, lawsuit-protected, dynasty-grade private bank. It's the closest thing to a personal Federal Reserve that legally exists. Quick check. If you're still watching, you already think differently about money than most people. Hit subscribe so I can show you the next one. Now, the asset class that sends you a check every month for doing absolutely nothing, mineral rights. When someone owns land, they often own everything beneath it too. Oil, natural gas, minerals. They can lease those rights to an energy company. The energy company drills, extracts, and pays a royalty, usually 12 to 20% of every barrel produced. The landowner does nothing, forever, until the well runs dry. Wealthy families have been quietly buying mineral rights in places like the Permian Basin in Texas for generations. Some of these royalty checks have been arriving every month for 60 years, and the tax treatment is absurd. The federal government lets you deduct a depletion allowance, which means roughly 15% of every royalty dollar comes in tax-free. The Texas oil dynasties, the Hunts, the Cullens, the Bass family, built their fortunes on mineral rights, not oil companies. The energy companies came and went, the land kept paying. You can buy fractional mineral rights today through publicly listed royalty trusts or through private platforms like Landgate. Nobody talks about it because it's not flashy. That's exactly why it works. Now the one that sounds frivolous but isn't. Museum-grade art. When a hedge fund manager spends $90 million on a single painting, he's not just buying art, he's buying 4 things at once. An asset that historically appreciates 8 to 10% a year, a piece of collateral he can borrow against. Major banks will lend you 50% of the appraised value, tax-free. A storage solution that legally avoids sales tax. That's what free ports in Geneva and Singapore are for. And a charitable donation tool that creates massive tax deductions when donated to a museum. One asset, 4 financial functions. Here's the killer move. You buy a painting for $2 million. You hold it 10 years while it appraises up to $10 million. You donate it to a museum. The IRS lets you deduct the full $10 million appraised value from your taxes. You spent $2 million. You got a $10 million write-off. You also got your name on a wall. You can't buy a Basquiat, but you can buy fractional shares of blue-chip art through platforms like Masterworks, where the minimums start at a few $100s. The returns aren't guaranteed, but you're now playing the same game as someone with a Goldman Sachs art advisor. And the last one, The asset Bill Gates quietly became the largest private owner of in America: farmland. Farmland does three things almost no other asset does. It produces real cash flow from crop yields or tenant farmer leases, usually 3 to 5% a year. It appreciates in line with inflation because the land itself is the supply and they're not making any more of it. And it's almost completely uncorrelated with the stock market. When the S&P drops 30%, farmland barely moves. There's also a tax angle most people don't know about. Farmland owners can deduct depreciation on improvements, expense conservation costs, and use 1031 exchanges to defer capital gains forever. Same playbook as commercial real estate. And in many states, farmland qualifies for massive property tax breaks. Gates owns over 270,000 acres across 18 states. That's a piece of land roughly the size of Hong Kong. He didn't buy it for farming. He bought it because he needed an asset class that still works when everything else stops working. You can buy fractional farmland today on AcreTrader or Farm Together starting around $15,000. Bill Gates isn't buying farmland because he's bored. He's buying the one asset class that wins in almost every macro environment. 5 assets: pre-IPO, whole life insurance, mineral rights, art, farmland. None of these are secrets. They're just invisible unless you know where to look. And now you do. If this opened your eyes, comment structure below and I'll drop the next one. The 3 legal entities every 6-figure earner needs set up before December. This isn't financial advice. Talk to a fiduciary before you do anything.